Hi, Mitch Argon here with Calneva Realty. Welcome back. I'm going to take you through the numbers for the greater Reno Tahoe real estate market in just a few moments. Let's get started. Okay, let's jump right in. We'll start with median price. As you can see, we are showing a negative year-over-year median price in nearly every market. Carson City and Carson Valley hit median price lows. This is not a surprise because a year ago, coming into the end of the first quarter, March of 2022, we were seeing a continued rapid rise in the median prices. They peaked at about June, and so we're going to be negative for a bit here on a year-over-year basis. And we'll look at the trend of what's going on in these markets in just a little bit as well. Trend line, you can see we're seeing the prices beginning to flatten out. So if you look at a single market in here, I'll pick, for example, Sparks. This orange line through, you can see it's relatively flat here since about November, December. The same is true for Reno. Those are the markets with the higher transaction volume. You'll notice that Carson Valley and Carson City are kind of much more volatile from month-to-month basis. So it's harder to get a trend line established. And then coming down here for Dayton and Fernley, you also see that they're beginning to sort of flatten out. So we're either hitting a bottom in this correction or we're hitting a shelf. Time will tell. In terms of the median price change from the peak back in the second quarter of last year, these are the numbers where we're down. So we do get questions from a lot of people. They're saying, hey, I'm waiting for the prices to come down. They have come down quite a bit. So you can see this column right over here. That's the down from the peak and a material drop. And we are, as I said, beginning to see this beginning to flatten out again. Quick look at the affordability index. I'm just looking at Reno right here. You can see that the median price in Reno did go up last month. Rates have been moving around, generally coming down, moving around a little bit, kind of in that 6.25% plus or minus percent range. And so you've seen an increase in the monthly payment here for March of 2023. And we'll continue to look at this. This is a rent versus buy kind of a signal in here. I think as this number approaches 2,000 or sub 2,500, we're going to see people be looking at buying versus renting simply because of the benefits of ownership. In terms of homes sold, we're seeing this decrease begin to moderate. Some of these numbers are still quite high, like you see Carson Valley here at 51%, probably a little bit of an anomaly. However, you're seeing here 24%, 6%, 32%, and a negative 7%, 16%. A few months ago, these numbers were probably all in about the 35% range. And so we are seeing the markets pick up, which I'll talk about in just a little bit as well. Month supply of inventory, we'll look at a chart that shows how this is trending, but fairly stable. You can see here we're sub 2 in all the markets except for Tahoe, which is historically higher in general due to the nature of that market. But up from last year where it was very, very tight, but still really technically in seller market territory. In terms of the trend line on the month supply of inventory, you can see over here that it's relatively, we saw Fernley come up and then come back down, but we're relatively flat in through here. If we were in a market that was seeing prices come down dramatically and continue to come down dramatically, the leading indicator would be this month's supply of inventory. As these lines go up, there's downward pressure on pricing. So you can see here, for example, during the 2022 year, when interest rates started to rise, back here we're showing in the June, July, August, September timeframe, you saw the rise in this month's supply of inventory, and we've seen a corresponding decrease in price, which I just showed you. So as this flattens out, it means that there's less downward pressure on pricing, and perhaps that's what we're seeing, the prices stabilize. Inventory is a really interesting phenomenon right now. We are seeing fewer homes coming on the market. Talk about the reasons behind that in just a moment. But I just wanted to highlight here the trend from December of 2021 through January 2022 and then through April of 2022 compared to the trend of December last year through April of this year. And the market that probably is the most pronounced in showing this trend is the Reno market. You can see that December of 2021, inventory was at 251, which is very low. It came down in January and February, and then it spiked back up again in March and April. So you have kind of like a horseshoe effect going on here with a trough at the bottom. Well, if you look at what's happened in the last few months here you got December at 718, which is way up here, and it's come down in January and February. And in March and April, instead of going back up like we would typically see, it is not, it's flattening out. And you see that same trend looking the same way over here in the Sparks market and other markets. We are not seeing new homes come on the market, and that's creating an impact on pricing and the market dynamics. So we'll talk about that in here in just a little bit. What are we seeing in the marketplace right now? Well, we're seeing an increase in buyer activity. The spring season combined perhaps with our long winter and some lower interest rates have had a significant effect on buyer activity in the marketplace. We are seeing surprisingly multiple scenarios where we're seeing multiple offers in the marketplace. Homes on the market 1-2 days, either going under contract, sometimes it's one offer. Sometimes we're seeing 2 and 3 offers and limited overbidding, much like we were seeing a year ago. Not anywhere nearly as strong as a year ago, but it's a dramatic change from what we were seeing in December, January, February. Inventory remains low. The big picture there is that many homeowners, I think the statistic is like more than 70% of the homeowners in the nation have an interest rate that's at 4% or below. And then there's like 50% that are 3% or below. Everybody was refinancing during the low interest rate period. So these homeowners are reluctant to sell the homes because they have to then take out a loan, perhaps at a much higher interest rate in the low 6s where we are today. And so what that's doing is it's suppressing the rate at which we're seeing new listings coming on the market, which we can see in our markets. And that, of course, is having an impact on available inventory. And with this increase in buyer activity, we're seeing this increased multiple offer scenario. We're seeing on a weekly trend something quite interesting. We're seeing more homes each week in our markets going under contract, meaning that there's an accepted offer, then we're seeing new listings hit the market. So the net effect of that is that each week we're seeing inventory getting smaller and smaller because there's just not enough new listings to replenish those that are going under contract. Net effect of this is that we're seeing prices stabilize because we have this upward pressure from the increased activity, the decreased inventory, and it translates into that's more stable price band that we've seen. So not sure at this point what we'll see going forward. It looks like we're going to be similar to what we're looking at right now. These major trends that we're looking at don't probably appear to not be changing anytime soon with regards to people putting homes in the market. But we'll keep an eye on it and keep you posted. The markets are very responsive to minor changes in interest rate currently, and that is what we're seeing. That will cover it for this month. I hope this has been a good use of your time. Thanks for joining me. If you have any questions, please reply to the email that you may have received to get this video. Down below, you can leave a comment, and we do have a link to the Greater Reno Tahoe Real Estate Report, which has these charts, but in a lot more detail by each market. If you want to go back and look at any specific market, it's a great resource to quickly come up to speed on where the market's been and likely where it may be going. Thank you very much. Until next time, have a great day.